This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, you have been listening to and watching President Trump live there at the White House, a range of topics discussing, as he also took questions from reporters in the room. Very good afternoon, everybody, across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. Carol Massar, along with Tim Stenovec, live here at Bloomberg headquarters. He did take questions on a lot of things, but we should remind everybody that he started speaking about Social Security, which we know in the past we've heard from the Treasury Secretary talk about the possibility of privatization for Social Security. So I feel like some reassuring words, perhaps, maybe, from the president in terms of the nation's Social Security system. He talked about the stock market and more.
He did, including talking about Brazil, but also about tomorrow's meeting. He said the more important meeting will be the second meeting that we're having. He said we're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. Carol, he said, I don't know. That's going to happen. It's going to be very important. We're going to see what happens.
It's certainly front and center for us. And we're going to actually talk about the macro, the geopolitical. We've got a great guest with us. The Minister of Finance for New Zealand, Nicola Willis, will be with us. We also have to talk about the inflation print today because we had a narrative yesterday off of CPI, Tim, and we have a new narrative off of today's PPI.
Yeah, the president did say the inflation numbers came in perfect, but
it's not 2%.
No. And also, if you look at what happened with PPI today, I think a lot of people would argue that's not necessarily the direction that you want to see.
We're also going to talk a little bit about specialty insurance. They're probably watching the rates market as well. So we've got the CEO of Access Capital Holdings. Right now, though, we want to stay with what we just heard from the president, an array of topics. We've got with us our own Jenny Welch. She is with us, joining us from our bureau in the nation's capital. She is Bloomberg Economics Chief Geoeconomics Analyst. Jenny, good to have you back with us. There was a lot from the president. I'm always curious because he certainly says things that might be strewed as opinion or thoughts and speculation about things. What is it that, from what we just heard from the president, anything in terms of new messaging that is something certainly the Bloomberg audience wants to know about?
Well, I think in particular, as it relates to geopolitics and the summit taking place tomorrow between him and President Putin, that what especially European partners are likely paying attention to is the fact that he just once again tried to set expectations low for that meeting. But I think the new element was indicating he might be open to having European partners join some sort of subsequent summit that he hopes to be able to arrange between Putin and Ukrainian President Zelensky. I think we would say the odds of that coming together are rather low, given Putin's previous opposition to meeting with Zelensky. But nevertheless, that seems to be a goal that Trump is very much keen to get across the finish line in tomorrow's conversation with Putin.
Jennifer, nobody has a crystal ball here, but we're thinking about possible and probable outcomes at this meeting. How are you thinking about these? What could end up happening post-meeting tomorrow?
So we see three broad potential pathways for the meeting. As you noted, it's hard to say for sure, so we develop multiple scenarios and hope that one of them pans out. I think the first one, and what we would consider to be pretty unlikely, is that talks collapse in such a calamitous way that Trump actually feels embarrassed and feels he needs to follow through on his previous threat of sanctions against Russia, which he's been lobbying since he returned to office in January, but hasn't actually taken any steps on. A second potential pathway is that they do make enough progress for Trump to declare victory of a sort and walk back those previous threats, which is probably his preference. But we remain rather skeptical that the two sides will be able to reach some sort of agreement that leads to lasting, sustainable peace. A key reason behind that is that Putin thinks time's on his side and that he's winning on the battlefield. And so his incentives to negotiate are pretty low, which means the third possibility that they agree to something that will actually put them on the path towards a full peace deal with Ukraine, we see is still relatively low at this point in time.
Is there any chance, if there is no kind of peace deal worked out in a first or even second meeting, that what ultimately happens is the U.S. steps up its efforts and support of Ukraine?
I think there's certainly that possibility out there, and that's what Zelensky and many of the European partners are hoping, that certainly that Trump doesn't make any agreements with Putin without them being there. And if he doesn't agree to anything with Putin that will lead them to the negotiating table as sort of a unified force, that at the very least he'll follow through on his threats to up the pressure on Russia while backing Ukraine stronger. I think my skepticism comes from we've been here multiple times since January and have yet to see Trump actually follow through on those threats. He certainly has a number of sanctions options at his disposal, but they all come with additional risks and costs, especially to the global oil market and to his relationships with other key countries, namely China, which is a major economic partner for Russia.
It's hard not to think about tomorrow's meeting in the context of when we've seen these two leaders meet in the past, and Helsinki in the first term certainly comes to mind, and everything that came along with that, Jennifer. What do we know about the relationship between these two leaders and what we could see, like, and from a negotiating perspective, from a behavioral perspective, from the way that we could see gifts to or from one another?
Yeah, the relationship between these two leaders is of high interest, especially here domestically in the United States, subject to previous inquiries, and I think will continue to be subject to a lot of skepticism. They also have extremely different negotiating styles. Putin is a former KGB intelligence officer. That really shines through in how he approaches diplomacy, focusing on control, psychological manipulation, playing the long game as part of these talks. We've seen him, for example, before play out international negotiations, pretending like he's interested in peace while continuing to make gains on the battlefield, most notably in Crimea in 2014 and 2015. With President Trump, he is a deal maker. He comes from New York real estate. He's interested in creating some sort of win for himself, especially something that he can sell publicly. At the same time, he's someone who has shown he's willing to walk away from the table if he doesn't get what he wants. That was apparent in his first term with negotiations with North Korean leader Kim Jong-un. And I think that's something he's trying to sort of put down a marker for he's willing to do tomorrow. I think the question is, will Putin sort of outmatch him and outmaneuver him on that front and be able to provide him some sort of tangible win that Trump says this is a victory, or play into Trump's longstanding skepticism of Ukraine?
We are living in interesting times. A headline just crossing the Bloomberg of a 5.2 mag earthquake, 132 kilometers southwest of Nikolsky, Alaska. So this is just crossing. It looks like probably from the U.S. Geological Service. So I'm just putting it out there because it all kind of is this big whiteboard and it all just connects, doesn't it? Hey, Jenny, one last question. You mentioned about, I think, people moving ahead, forging agreements and so on and so forth. The president was asked specifically about Latin America and China getting closer and cozier. How are you looking at that, continuing to look at how things are changing when it comes to important global relationships? And is the U.S. increasingly being left out, or no? Is the president showing that he definitely has strength and still has a seat at the big table?
Well, certainly China's efforts to court Latin America and other global South countries are longstanding. I think Beijing is making a lot of this moment where a lot of those countries, in particular Brazil, are facing a heavy weight of U.S. tariffs and trying to gain the most that it can from those relationships, positioning itself as sort of the rock in Trump's storm. I think from the U.S. perspective, and really from Trump's perspective in particular, he has kind of brought back this theme of almost a Monroe Doctrine approach to Latin America, where this is considered the U.S.'s traditional sphere of influence, and he's going to push back on China, especially in places like the Panama Canal that are regarded as kind of strategic choke points. I think for many countries in that region, though, the question is, what is the U.S. going to do to give them an alternative? Because tariffs as sort of the punishment, the stick, might not be enough.
All right. One of our rocks. She is a rock when it comes to what's going on
too.
Out of the White House. Totally. And putting geoeconomics into perspective. Jennifer Welch, thank you so much. Joining us there from D.C. She is Bloomberg Economics Chief Geoeconomics Analyst. We're going to stay with news from the Capitol, talk a little bit about economic news in just a moment, but we got to get a check on trading.
Yeah, let's get a check on trading with Charlie Pellet. He's also got a check on the top business stories happening. Hey, Charlie.
Well, hello there. Here's what's going on. Right now on PPI Thursday, we have got the Dow, the S&P, NASDAQ, all trading lower. Looking at a 6-point drop right now at 6460 on the S&P, a decline of 0.1%. Dow Industrials down 94, decline there of 0.2%. NASDAQ down 24 points right now. That is a drop of 0.1%. The Mag 7 index up by 0.4% on a down day for the rest of the market. 10-year yield 4.29%. Gold down $18 the ounce, $33.37. 11, a drop right now of 0.5%, and a rally for crude WTI West Texas Intermediate up 2%, 63.92 a barrel. Major move today downward for Bitcoin, tumbling 4.5%, 117,326 on a Bitcoin. Tapestry is plunging 14%. Its annual outlook for a key profit metric missed analyst forecast. Its brands include Coach and Kate Spade. And briefly, first day out for exchange operator Miami International. And in its first day of trading, MIAX on the ticker up by 33.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We promised we want to get to the day's economic news. Came out of the nation's capital. It is that stronger than anticipated inflation reading. It spurred a rise in bond yields and the U.S. dollar. And traders trimmed bets that the Fed will cut interest rates next month. Man, what a 24 hours we've had. Separate data today also showed U.S. jobless claims edged lower last week. That suggests, Tim, that employers remain reluctant to lay off workers.
This as U.S. Treasury Secretary Scott Bessent yesterday on Bloomberg TV and radio, again on Fox Business this morning, shared his view on U.S. rates and that he's not pushing the U.S. Central Bank on cuts.
I didn't tell the Fed what to do. What I said was that to get to a neutral rate on interest, that would be approximately 150 basis point cut. I did not call for them to get there. The other thing that I said was that perhaps because they had bad BLS data in June and July, that perhaps a 50 basis point cut in September was warranted.
That's U.S. Treasury Secretary Scott Bessent earlier today on Fox Business. With more on the U.S. economic backdrop, with us we have Bloomberg News economics editor Molly Smith. She joins us here in the Bloomberg Businessweek studio in New York. Ira Jersey, our Bloomberg Intelligence chief U.S. interest rate strategist. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Molly, I want to start with you. The data that we got this morning, the PPI inflation print, it was hotter than expected. Is it bad? It's just a reminder that inflation is still pressuring these businesses?
Yeah, I think that's a fair way to think about it, because you look at the market reaction after, which, yeah, of course, the stock market's giving up the gains that it had from yesterday, and, treasuries as well. But everyone's still expecting a rate cut next month. Maybe the odds were like 102% before the report, and now they're like 97%. So that hasn't really changed. But yeah, definitely a reminder that inflation is still very much there at the wholesale level. But really what I think the bigger signal was from the report today, there's a part of the PPI report that describes margins, and that's what really drove a lot of the increase. So that's maybe more sign of getting that tariff pass through, that, companies aren't absorbing as much of those costs as they were originally.
That's what Tom Barkin of the Fed, I think it's the Richmond Fed, right? Mm-hmm. Thanks. Yeah. Who was speaking at a virtual event, and he said that manufacturers are still struggling with margin pressures. Like, it's got to go somewhere. Either we're paying for it, right, or companies are going to pay for it. But is there a point in consumer sentiment where we kind of get used to it and we're kind of okay with it, and everybody figures out how to work in a higher cost tariff environment?
Well, that's the thing, though, is that it hasn't really substantially hit consumers yet. And I think that's the concern then, that since there has been so much of companies absorbing a lot of the costs so far, yes, we have seen some select goods prices come up in recent months, but it hasn't really been as severe or as widespread as we thought it was going to be. So I think this is more the concern, that if you are in the camp that producer prices are a leading indicator of consumer prices, then that there's more concern that this is going to ripple over to the consumer side.
So, Ira, we've talked about the equity market reaction briefly with Molly. Take us into the rate reaction, not just with today's PPI print, but also what we saw with CPI earlier this week.
Yeah. I mean, the market's gone nowhere.
That's one way to answer it. Yeah.
I mean, it's for sure.
Why do we come in every day, Ira, if it just goes nowhere? But anyway, go.
Well, there's always these short-term gyrations, and then obviously we have longer-term trends to think about as well. And to Molly's point, we're no longer pricing the 100% chance of a cut. But keep in mind, when you look at what the options market was doing, particularly after Secretary Bessent's comments yesterday, we actually did have people buying options on a 50 basis point rate cut in September. So the idea that we could have a 50 basis point rate cut, I think, was predicated on the idea that we'd have have pretty benign inflation measures. And today's data certainly suggested that maybe there will be some upward pressure on inflation, and that just muddies the waters for both the timing and pace of Fed cuts. So for the long end of the curve, like the 10-year, the 30-year bond, the Fed starting to cut cuts in in September versus October versus December doesn't really matter that much. But where are they going to get to? And that hasn't changed at all. They're only going to cut to about 3%. So, unless they're going to cut to 1 and 2.5% or something, the long end of the curve probably isn't going to move very much.
All right. Is it fair to say that at this point, all bets are still kind of off, only because I think, don't we have more inflation readings? We have another jobs report before we have Jackson Hole, Ira, before we actually get to that September meeting?
Yeah, well, all of these things are going to matter, right? And the thing is, Jackson Hole is going to be before we get the PCE deflator for July and before we get those first reads on August data. So, we still have a long way to go. So I suspect until then, every single little data point that we get, we're going to see these 5, 6, 7 basis point moves in the front end of the yield curve. Yes, we're on again for 50, or no, we're definitely not getting a 25. That's going to keep jumping around, but we're basically going to go nowhere. And so someone on my team suggested, hey, people who are selling vol right now on rates might actually make for an interesting trade because short-term rate volatility, while yes, we're moving 6 basis points today, we're pricing for 6 basis point moves every day. So as long as we don't get much more than that, it's not going to be a big deal.
Molly, anything you want to say in terms of there's a lot to happen or could still happen before that September meeting. And from what we get from Fed Chair Jay Powell, he sits down with the team and, okay, what are we looking at on that given day?
Right. And like what Ira was just saying, so we've got the PCE print for July coming at the end of this month. And the data today kind of helped to round out a lot of what those estimates will be. Going to get some more inputs tomorrow with the import-export price index, but a lot of them looking for the core PCE on the annual basis to pick up. So that's definitely going to be a bit more of a firmer print. And then I think what the Fed is really arguably watching maybe more at this point is more the labor market data. And we're going to get a couple looks at that early in September before that September meeting. We've got the August jobs report on September 5th, and then right after that, perhaps even more fireworks with the benchmark annual revisions, that first guess of it. So Trump has looked at this before. He's come after it when he's talked about job revisions, and this one will definitely get a lot of eyeballs.
What do you make of some of the commentary, Molly, that the payrolls report that this is commentary we've gotten in the last 10 days or so, that the payrolls report is not important anymore because of the way the data is gathered? Oh, you've had a lot of folks. You've had a lot of folks. You even had the nominee for to head up the department come out and say, well, maybe we suspend it. This was pre-nomination.
Right.
Maybe we suspend it before and improve the data gathering process before we move forward with it more.
Right. So I would say the jobs report is absolutely still very important. And yes, what you're saying here about E.J. Antoni, who's Trump's pick for the next BLS commissioner, who, by the way, is still subject to Senate confirmation, and Senate's out through September right now. So nothing really moving on that front at the moment. But yeah, the payrolls report is definitely still important. And I had a story out yesterday outlining what a BLS commissioner can and can't do. One of them is that he can't suspend the jobs report. It's considered one of these really important economic indicators. We don't need to get into the acronym that describes it, right. But by law, data agencies are required to put out those principal reports, and the jobs report is one of them.
All right, good to know. Last question to you, Ira. I do think about the White House, the president, putting pressure on things or saying things with what we just kind of take for granted, that we're going to get these economic reports, that the Fed is going to be independent. I am curious, as you watch the rates market, if you're hearing from traders and members of the community, the pressure on the Fed and Fed Chair Jay Powell in particular, and the constant commentary by the president that I'm going to, here's my list of maybe who I'm going to, announce for the next Fed chair, or I'm going to announce it soon. Is that impacting Fed policy? Do they think it will ultimately impact Fed policy, put pressure on Jay Powell to do something that he might not want to do?
I don't think so. I mean, certainly, I think Jay Powell's going to treat himself as a lame duck. It's pretty clear that he's not going to get reappointed, right? So I think for him, it's like, I'm going to do the best job that I can, and I'm going to keep on doing what I think is right. The president can have his opinion. I mean, just like we all can, as to what the Federal Reserve should be doing. It's my job as an analyst to try to determine what they will do. And I think this Fed, right, until we get more nominees who are likely to be much more dovish that President Trump appoints, this particular Fed is going to probably continue to be somewhat cautious about cutting interest rates because they don't want to make the same mistake they made last year, right? This time last year, the economic data was actually pretty bad, and then they cut rates 50 basis points in September, and then the economy turned around, right? So I think they are worried about inflation, and so unless we get an absolutely terrible jobs data, it's, maybe you can make the case that the Fed is going to cut 25, but cutting more than that, you'd need to have something astounding on the employment situation to make the Fed and all of the committee, right, or a majority of the committee, think you should do more than 25 basis point move in September.
Ira Jersey, he's Bloomberg Intelligence Chief U.S. Interest Rate Strategist at Bloomberg Intelligence headquarters in Princeton, New Jersey. Also, a big thank you to Bloomberg News Economics editor Molly Smith, who joined us here in the studio. Taking a look at equity markets on this Thursday afternoon, just about 90 minutes to go until the close of equity trading. The S&P 500 down 0.1%, the NASDAQ down 0.1%, the Dow down 0.2%. The economic data that we got this morning, everybody's talking about PPI and jobless claims. Tomorrow, though, retail sales is what we'll get.
All right, everybody. And we should remind everybody that PPI number coming in at a 0.9% increase. So it did come in hotter than forecast, and core also coming in hotter as well. Year over year, PPI 3.3% and core is at 3.7%. So it's definitely ticking above what the Fed likes to hit in terms of that 2% number. As for the president, just off a press event at the White House, he did say inflation is down to a perfect number. He said hardly any inflation at all. He also mentioned the stock market soaring, 401ks soaring. He also talked about something that is certainly a focal point for us, and that is the meeting between the United States, President Trump, and Russian President Vladimir Putin. The president saying that he thinks President Putin will make peace, and also talked about a second meeting will be more important than tomorrow's, and talked about potentially European officials being part of that meeting. And that is kind of where we want to start. Getting an end to that more than 3.5-year-old war will likely take time and more than one meeting, as we just heard from President Trump moments ago.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not. It's I don't know that it's going to be very important. We're going to see what happens. And I think President Putin will make peace. I think President Zelensky will make peace. We'll see if they can get along. And if they can, it'll be great.
All right, that, of course, was President Trump just earlier this hour, talking from the White House, talking about meeting President Putin, talking about expectations for a second meeting, talking about bringing European leaders in, and saying that he thinks President Putin will make peace. He also said he thinks President Zelensky of Ukraine will make peace. So we are going to be watching that certainly tomorrow. All right, let's get to our guest, because this is kind of our big backdrop. We welcome to our studios. She's been patient as we go through all of the news today. And here at Bloomberg headquarters, Nicola Willis. She is Minister of Finance for New Zealand, joining us here in studio. There is a lot going on. Thank you for your patience. Welcome, welcome. How do you see kind of the macro environment? There's so much going on for so many different countries. We have a very active White House. We call it an activist White House. And I'm just curious, how would you describe the state of world affairs today?
Well, I think that there's considerable uncertainty in world affairs today, where there were once things that were given and were very predictable. We are now seeing more volatility in policy decision making, which has implications for investors and for sovereigns in terms of the way that we go about things. For our part in New Zealand, we tend to want to be a beacon of stability amidst all of that, to say, you know what, we're going to continue to be rules-based. We have low, stable inflation. We have declining interest rates. We're going for growth. We trade with many countries around the world and wish to continue to pursue freer trading relationships. We have prospects for growth And so we aim to be stable, predictable, we have secure institutions, and we think those things will be at a premium in the coming years as there is more volatility.
Mr. Willis, whenever we have officials from other countries visiting the U.S., which is a big part of your job, we always ask the question about a particular trip. Why are you in New York right now? Why are you visiting us right now?
We're here because we value very much both our economic and security relationship with the United States, and I'm pursuing more economic growth for New Zealand and New Zealanders, and we believe it's in the interests of both of our countries to forge stronger trade and investment ties in pursuit of that.
So how does that work in an America First environment, in an environment from Washington, D.C., where the communication has been very strongly, this is an administration that is looking at the priorities of the U.S., whether or not it affects other countries in a negative way?
Well, quite simply, our proposition is it's in the United States' interests to have a strong and growing relationship with New Zealand. We're part of the Five Eyes security partnership along with Canada, the United Kingdom and Australia, and we continue to believe that's very important for the United States. We also have a very complementary trade relationship. We export primary products, tech services, which Americans value, and equally we import significant amounts from the United States, and we'll continue to do so. We, like many countries, are increasing our investment in defence, and it's likely that some of the kit that we will be purchasing in future will be manufactured in the United States. Similarly, when our national airline replaces its fleet, it's likely that some of those planes will be produced in America. We have very strong and long-standing people-to-people ties. Our two countries have got along well for many, many decades, and we think it is in the interests of both countries that New Zealand continue to be a strong relationship that the United States can look to and rely on.
So is this White House, though, impacting the relationship, the strong relationship that New Zealand has had with the United States in any way?
We continue to view the United States as our friends. Now, of course, we would prefer not to be facing additional tariffs. Find me a country that says, yeah, we really like additional tariffs. And we're not in that. We're not in that situation. And we have a history of pursuing freer trading agreements. We have very, very low trade barriers for United States imports, and we feel we've treated American exporters very well. So we would prefer to be on a lower tariff rate. We've ended up at 15% as a base rate, which reflects the fact we have a small trade surplus with the United States. We're talking very marginal New Zealand dollars, 500 million. So it isn't big. We don't really think...
But it's disappointing that it wasn't maybe the 10% that folks were thinking initially.
We would have preferred that. We understand the rule that's been applied, but it's hard to conceive that New Zealand, a country of 5 million people, as any kind of threat to the manufacturing or industrial base of America.
Does it lead, though, and I guess we're trying to figure out, we talk a lot about the geopolitical world order changing around. We talked about, the president was just asked about maybe closer ties between China and Latin America. China already has a presence, we know, in Latin America, but maybe they are increased as a result of what's going on. Are you forging different relationships because of some of the strained relationships out of the United States, or strained relations out of the U.S.?
I wouldn't characterize it that way. New Zealand has always looked to forge relationships around the world and to reinforce the rules-based system wherever we can, and to work through multilateral institutions because we're small and our voice will never be the loudest. Like the United States, we have a strong and important economic relationship with China that we've been able to maintain while also taking very different points of view on many matters, and we've been able to balance those two things.
So not strengthening them with China because of maybe what's going on?
No, today? I would not characterize it that way, but continuing to lean into our relationships where we have common interests. So we are members, for example, of the CPTPP trade relationship, and we have welcomed the EU's interest in becoming a dialogue partner and looking to reinforce that trade arrangement. We've recently signed free trade agreements with the United Kingdom, with the European Union. They're important, with the GCC, the UAE, and we're pursuing a trade relationship with India. We think it's very important as a small exporting country that we have options in who we trade with, and wherever possible try and open more doors. We've got a grand history of doing that. We were one of the first countries in the world to drop subsidies to ensure that we were genuinely open to the world. We won't get rich selling to ourselves. We're too small for that. So we do well when the world welcomes our goods and services.
Minister Willis, are you meeting with any U.S. officials on this trip?
Not on this trip, 36 hours only, I'm afraid. But I look forward to returning to Washington later this year for some of the annual meetings. And at that point, I would hope to meet with some people from the administration.
At that point, will part of your job be to try to reduce the 15% tariff on goods from New Zealand?
Well, look, we're realistic about the fact that the Trump administration have set a clear parameter that countries that have surpluses are unlikely to get reductions in their tariffs. But we will continue to advance our case, which is that we have a very complementary trade relationship with the United States built on a security partnership and a very long history. And we will press the case for our exporters that we think be fairly facing a lower rate. And we will continue to share that message with our friends in the United States to make sure that if there is reconsideration of the current tariff regime in future, that we're front of the line for reconsideration. We think we should be. We're Kiwis. We play fair. We play by the rules. We sell you Sauvignon Blanc tourism experiences and lean red meat that Americans love. And we would like you to be getting it at fair prices into the future, and a lower tariff rate supports that. And we expect to continue buying huge amounts of American goods into the future. So there's nothing to fear from giving New Zealand a lower tariff rate in the future.
You're also great sailors. I'm just going to point it out as a fellow sailor myself. We're talking with Nicola Willis. She's Minister of Finance of New Zealand here in our studio at Bloomberg headquarters in New York City. What are you guys doing to encourage foreign direct investment?
Yeah, well, we're very big on this. So we've set up a new entity, Invest New Zealand, to connect international investors with New Zealand. We're reforming our legislation to make it easier for foreign investors to make investments, and administratively we've sped up the process by which they can do that. Particularly, we've introduced golden visas, the Active Investor Plus, which means that investors can get residency rights in exchange for making investments, either actively or passively in New Zealand assets.
Is it working?
It is working. We've been delighted by the response, a really high degree of interest. Hundreds of people have applied for those visas within the first few months, pledging over $1 billion in New Zealand funds. And I think that reflects two things. One, New Zealand is a safe, secure place in a world that increasingly is less so. And people like the idea of having that residency in New Zealand. But second, they can see that many of our investment opportunities are currently undercapitalised. Investing in New Zealand is a good bet.
Can they buy real estate in New Zealand, though, if they get residency?
Not currently. That is excluded. Our government, which is comprised of 3 parties, has been in discussion about loosening those regulations so that those who get an active investor visa may in future be able to purchase a property in New Zealand.
How far into the future? What are we talking about for a timeline here?
Well, those talks have been underway, and you would expect that a decision would be made by our cabinet in the coming weeks.
Okay, in the coming weeks. So, Carol, get ready. You can buy that.
I'm in.
Your little slice of paradise. We're surrounded by a big fat ocean.
I know.
We have huge amounts of land. It's beautiful. I think the world should be looking at New Zealand. We have great prospects.
Will the U.S. tariffs impact growth in your nation?
Well, as I said, we'd always prefer not to be facing those tariffs, but as a proportion of our overall trade, it is actually quite small. The more significant impact for us is the same as it is for many other countries, which is a lower rate of global growth resulting from tariffs and retaliatory tariffs.
Are you worried about a global recession then?
Well, no, not a recession, but just a lower rate of potential growth than would have otherwise been the case, particularly out of our trading partners. That then affects prices for our goods and demand for our goods.
And it can slow enough to feel like a recession, right?
Well, it can slow enough to feel like we're not meeting the potential that would have otherwise been realised. And that's been reflected in our forecasts for the New Zealand economy, in which we did pare down our growth expectations for the future based on what was developing with tariffs. Obviously there's a lot of water to go under the bridge to see how all of this does play out globally, how countries are affected and what it means. For New Zealand's part, we continue to forecast strong growth, low inflation. That will remain the case, but a tariff-free world is one in which we grow faster.
Do you think that might come back if there's a different president in the White House?
I think countries will always continue to pursue their own interests, as they should. And that's why I will keep singing the song for freer trade, because that is in New Zealand's interests.
So glad to get some time with you. Thank you so much. Tim and I both enjoyed it. Nicola Willis. She is Minister of Finance for New Zealand right here in our studio.
Hey, let's get an update on today's trade and the top business stories. Charlie Pellet is standing by. Hey, Charlie.
Hi, thank you very much. And here's what's going on. We do have U.S. stocks trading lower right now with the Dow, the S&P, NASDAQ all in the red. S&P little changed as a pickup in inflation this morning, lifted bond yields and the dollar. Traders are paring bets that the Fed will cut rates next month. So here's where we stand now. S&P 500 index down 3 at 64.63. That is a drop of under 0.1%. We've got the Dow Industrials down 69, a decline of just about 0.1%. The NASDAQ Composite Index down 13, a drop of just about 0.1%. On a down day for the rest of the market, our Mag 7 index pushing higher, up by 0.4%. 10-year 4.29%, with the 2-year 3.73%. Gold is down $17 the ounce. Spot gold right now lower by 0.5%. A rally for West Texas Intermediate crude up 2.2%, $64.03 a barrel. And Bitcoin is now slumping by 4%, holding just above $118,000. So again, the Dow, the S&P, NASDAQ all in the red. Peloton Interactive planning its biggest product upgrades in years, including refresh hardware. Peloton Interactive lower by 1%. And Apple's blood oxygen tracking feature for its smartwatch is returning to the U.S. after a years-long legal fight. Apple shares today, they are trading lower by 0.2%. Recapping stocks lower, Applied Materials coming up after the close of trading. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the specialty insurer Axis Capital Holdings reported earnings late July. Second quarter revenue matched street estimates. It was up 13% year over year. Company highlighting AI in its press release. The stock, I should point out, sold off about 3.5% in reaction, but it is up nearly 9% year to date and up 30% in the past year. They also had some news today. So let's get to it with Vince Tizzio, President and CEO of the $7.5 billion market cap company, Axis Capital Holdings. Good to have you back with us. How are you?
Thank you, Carol. Great to be with both of you.
We talked with you in mid-March.
Indeed.
A lot's happened since then.
For sure.
How has your world changed?
Well, it hasn't changed. The company is performing exceedingly well. As you mentioned in your outset comments, we had a very strong second quarter, culminating the first 6 months of 25, really well positioned. Today, we announced a planned succession of Pete, my partner, our CFO. We've been working on this collaboratively for a number of months. Mm-hmm. We're really excited about having Matt join our company in 26.
You're talking about Matthew Kirk, who's going to join the company next year, CFO of NStar Limited. Right. He's been in the business he's been an executive for quite a bit of time, 3 decades. We'll get to a little bit more on that. I want to get to what Carol said about AI and the way that you guys are using AI when it comes to analytics, when it comes to underwriting policies.
Yeah.
What are you doing differently now that you weren't doing a year ago?
Yeah, so first it starts with what's our objective? What's our purpose, right? We want to enrich the experience of our customers, our employees. We want to bring innovation to our policyholders. What does that translate to? It includes bringing in insights through data recognitions that we haven't had access to in our historical past, creating not only predictive insights, but bringing greater predictability to our policyholders.
Does that mean lower costs?
Over time, it can. For
lower
better
costs
risks,
for customers?
For customers, for
or higher margins for you?
It'll be both, right?
Okay.
I mean, it has to be a win-win for it to be sustainable. And so better insureds in terms of risk mitigation will receive the benefit of better priced, better term and condition policies.
Do you see the technology removing the role of actuaries at all, or removing headcount at all?
Not at all. Actually,
not at all. Ever.
Not at all. Complement over time remains to be seen, Tim. But I think it's a compliment in the early days as we're all pursuing this journey of how predictive the insights can be from using AI. I think the jury is still out in specialty lines.
Well, yeah. Won't AI make it, Vince, very sensitive in terms of figuring out rates, so that if something is a much, or the data perceives it as a much riskier situation, that's going to be a policy that's going to price up, right?
I think it's going to help inform.
So it's going to kind of go in both ways.
There'll be ebbs and flows. There'll be ebbs and flows. And, please recall, these are still early days in specialty lines on the use of AI. This is not a policy that carries generally standard terms and conditions. A lot of what our insureds receive are customized, tailored solutions. And so over time, we'll work at the AI models, the brain of the models, to be responsive to that dynamic. which is quite different from a standard policy.
Talk about that, because cyber, marine, energy, accident. Like,
You bet.
I'm a boater, and it can be very difficult getting boat insurance right now. And it's really interesting. Sometimes we felt like it didn't take into account that we've been doing this for several decades because it's the size of the boat or something. And it's just interesting that it wasn't very clear in maybe assessing a situation.
Well, for sure. Assessment of risk is one dimension.
I have insurance now, though.
Yeah, well, good for you.
Always have.
So.
Good for you. We have a maritime program at Access. But in any case, I think let's talk about your question in a broader context. We're in the third quarter, second month of the third quarter. This is the historical hurricane season for property casualty companies. We're all observant to the 17 to 19 predicted storms in the quarter. How we're thinking about the models that we have in place to help our insureds on the quantity of the limit that they buy for the protection of themselves certainly is starting to be benefited by the AI journey that we're on. We're able to be more predictive. Yes.
No, forgive me, because I'm just thinking about government data.
Yeah.
And if they're cutting back and don't have the resources or the people to accumulate that data, and we've talked about that, and certainly
for sure.
in terms of climate, is that a problem?
It certainly has an impact, but to suggest that we're solely reliant on the one model from the government is not the case. We have a wonderful breadth of capabilities in our modeling, and we have our own catastrophe team like many property casualty participants.
Cybersecurity.
You bet.
How fast is that growing?
It's incredibly robust. It's an incredible sector. We talked the last time I was with you, Tim, about ransomware. Ransomware matters, regrettably, are not going away.
I think every time you're here, we're going to be talking about that.
Bet.
Because each time, even if you come back after a couple months, there are always new cybersecurity incidents.
For sure.
How do you ensure those?
It's complicated, right? There's a lot of risk diagnostics that we bring. What does that mean? We assess our insured's potential to protect themselves from claims. What does that include? Double authentication factors.
So meaning the insured has to put into practice certain things with their staff to make sure
no doubt
that they are protecting themselves in order to be insured
Resilient.
against this type thing.
Educated consumers are really strong customers, and educated means that they expend training resources to help their employees protect the company from ransomware matters, phishing matters, and the like.
You guys were largely a reinsurer, right? So insurance for insurance companies. You've been pivoting away from catastrophic or catastrophe insurance, more towards specialty. What is the business composition? Give us an idea of what are the policies you're writing, and where's the growth and where isn't the growth?
Yeah, as of the second quarter, roughly 77% of our revenue came from our insurance business. And you reflected, Carol, before the types of insurance that really comprise that. It's energy, it's D&O, it's cyber, it's excess casualty, primary casualty. The balance is our reinsurance business, and we did pivot a few years ago, moving toward a insurer profile. But our reinsurance business is an important business. It has a focus on specialized reinsurance products. What does that mean? Credit, surety, mortgage, cyber. Those are important perils that our cedents seek coverage from Access to protect against.
All right, we've got to wrap, unfortunately, and you were so patient. We've had a lot of news today, but come back soon.
You got it. Nice to be with you.
Nice to have you here. Vince Tizzio, President and Chief Executive Officer of Access Capital Holdings, right here in studio.
I'm Tim Stenovec, along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Graffeo. Emily, a lot to choose from today.
Oh, yeah. There were a lot of movers. I picked a American bellwether company, we could call it, Deere, the tractor company, ticker DE. It's actually falling, biggest intraday drop since 2022. It's pared the losses a little bit, but it's still down about 6%. They trimmed their net income forecast for the full year with lower grain prices, curbing farmers' spending. And the company actually came out and said itself, customers remain cautious amid ongoing uncertainty. And then when you look at what the street had to say, Wall Street analysts were a little bit more blunt. CFRA said tariff uncertainty is making farmers cautious in spending decisions. So like, you're not going to buy a big tractor if you think all of a sudden
it's getting killed today.
Tariffs are going to, hit your business.
Yeah, stock is still up though for the year, about 13%, but man, quite a haircut today.
Yeah, it's about a $9 billion change in market cap right now.
Yeah, that accounts for something. Hey, talk to us about Tapestry. Ticker is TPR.
Okay, so Tapestry, I feel like was coming back in the news a lot this year because they're the parent company of some brands that we're probably all familiar with. Kate Spade, Coach. Bloomberg News has actually written a lot about how Coach was making really big inroads with Gen Z. That business is actually still doing well. Their earnings came out, though, and they forecasted a rough year ahead for the Kate Spade business. And then their EPS forecast missed Wall Street's high expectations. The company also said it's facing greater than expected profit headwinds from, guess what, tariffs. So that ticker is TPR, and the stock is down about 14% right now. Biggest intraday drop, though, since March 2020.
But it's up almost 50% this year.
Yeah, I think it's a little bit of profit taking today, and probably also a little bit of like super high expectations heading into the report.
Do you know what? I have an original black Kate Spade bag, which she was made when she was like kind of hand making it from her own, putting her little labels on it.
That's incredible.
I wouldn't tell people that, Carol.
I don't even let Aggie have it.
Yeah. Okay. Speaking of stocks that are up, bullish.
Bullish. Yeah. Good day to be a bull here on this stock, if you guys don't mind the pun. This company IPO'd yesterday. It was, they raised over $1 billion in the IPO. It was insane of a day yesterday. It's extending those gains today. It's up about 7% right now. Yesterday, though, it was up over 200%, with their shares doubling from the IPO price. So this is a crypto company. They're also the parent company of CoinDesk, which is a crypto news company, and they also have a digital asset exchange.
I don't get it. I'm just going to... Hi, my name is Carol, and I don't get it.
Well, other people, I guess, in the market get it or want to get in on the momentum and the speculation. It's been a good year for like crypto companies going public, crypto companies being added to the S&P 500 with Coinbase, Circle, the stable company, IPO'd in June. So it's hot right now to kind of tap into the public markets and get financing if you're in crypto.
It's been a better year for IPOs.
Yeah, and Bitcoin is doing so well too. So it's
New
kind of a perfect storm altogether. Everything coming together.
Great stuff as always. She's amazing. Emily Graffeo joining us here with the Stock Movers. Hey, check out our 5-minute episodes of the biggest winners and losers in the stock market. Stock Movers. You can find it on Apple, Spotify, or anywhere you get your podcast. Whew. That was just the first hour.
Hey, we got a great couple of hours coming up next on Bloomberg Businessweek Daily. If you are sticking with us, Mark Gurman is going to be stopping by because he has exclusive details on what Peloton has up its sleeve. And also, Carol, a big reversal for Apple.
Do not go anywhere. The close coming your way on TV. Tim and I continuing on Bloomberg Businessweek Daily.